I have two headlines for you today. Here's the first one. U.S. households took on debt last year, the highest amount of debt in 15 years. Credit card balances jumped in the fourth quarter more than in any previous quarter in history. Here's the other headline. U.S. household net worths are at all-time highs, and household debt service is near historic lows. Which one of those two headlines is correct? That's what I'm thinking about today. You know, it's really interesting as we take a look at facts and headlines and how we think about things. And those two headlines really interesting. The first one was an actual headline from a February edition of the Wall Street Journal. It's factually true, right? I think it was $1 trillion in debt added to household balances last year. Credit cards, fourth quarter, single biggest jump in history. The other headline was one that I made up, but it's based also on facts. U.S. household net worth is at record highs, and how much of disposable income goes to consumer debt is near historic lows. You know, how can that possibly be, right? I mean, how can these two things correlate? And well, then, first of all, let me show you some of the facts on this. We get this information from the J.P. Morgan's Guide to the Markets. I've mentioned that before. Great resource. We'll post a link in the show notes. You can look this up. I think this slide is on page 23 of their recent edition. And take a look here at household net worth going back to 1990. You know, look at that upward trend. And so they point out late 2007, right before the credit crisis here. And then until now, I mean, double, right? Household net worth double. And as a side note, it's interesting. And we get people and legitimately say, geez, if I'm getting ready to retire, I can't go through 07, 08 again, right? Totally understand where they're coming from. And yet when you look, hey, if I'm retiring today in 15 years, if I've got double what I have now, I'm pretty happy with things, right? Will history repeat itself? Of course not exactly this way, but interesting for perspective on that. And so household net worth going up. Take a look at this slide then here too. Debt service as a percentage of disposable income, right? Going back this to 1980 here, and look at that, above 10% all the way along, spiking back in, in the last 10, 15 years, and then today under 10. Right. And part of that, I don't know, interest rates being lower. I don't know the details, behind the scenes on that, but it's really interesting when you take a look at, oh, yeah, we added on debt. Absolutely. Credit card debt. Yes. As a function of income, is that the right answer? I don't know if that's the right way to look at this. I'm not saying that it is, but what I am saying, it's a different perspective. It's a different story. Taking on $1 trillion more in debt, golly, that's factually true and it sounds scary, but debt is only a problem in the absence of assets, right? It's this balance of things, and by giving one headline, my made up headline, or the actual headline from Wall Street Journal, doesn't tell the whole story. And I guess that's my point, is for us to think about things for ourselves, not what's in, pick your favorite publication or your preferred news feed, right? It doesn't make any difference which side. It's, don't always take those things for granted. Like, what's the whole picture on this, right? Have some insight. Things typically aren't as bad as what you might think, or what makes exciting news, and also not as good as what makes exciting news as well, right? Have that perspective as we think about this. So that's what I'm thinking this week, and let me know what you're thinking. Drop some comments in the notes below. Send us an email directly to the office, and let us know if you have questions or ideas for future episodes. So thanks for watching.